Germany's monopoly territory is home to 17 million people.
Families already struggle to pay their bills.
AGE was convicted of 91 felonies.
Really? I mean, what's next?
Greybeard talks solar. He is SolarWise.
Welcome to the Greybeard Talk Solar YouTube channel. This is an awesome place where a little wisdom goes a long way toward turning sunshine into some serious savings for you. And today's show is all going to be about the changes coming in 2025 and beyond. I'm going to give you my view of the best way to adopt solar in 2025 and beyond, because given the big, beautiful bill is eliminating the 30% solar income tax credit, it changes the game in solar for everyone. But the good news is solar is still awesome. It still saves a tremendous amount of money, and you've still got plentiful options available. So if you find this information informative, educational, and at the very least thought-provoking, please smash the like, share, and subscribe buttons. Spread the word. We're trying to get the channel to more and more folks, and so we'd appreciate your support in that endeavor. So just to catch you up to speed, Trump's big, beautiful bill effectively ended the 30% solar income tax credit that you get for owned systems. So we're really going to start there. Effectively in solar, these are the changes that I see coming in 2025 and beyond, and I think many of these changes are going to happen well before 2026. And effectively, the first thing I'm going to talk about is solar financing is dead. Effectively, with rates where they are right now, solar financing without the benefit of the solar income tax credit. So to catch everyone up, here's how that tax credit works. If you buy a solar system and it's 50 grand, let's say, 30% of that cost, so 30% of 50 grand is $15,000. So that $50,000 system, right now today, before the tax credit's lost, you would get the benefit of a $15,000 mitigation. So, and effectively, you'd have to write a check for $50,000, and the net cost of the system is only $35,000 after that tax credit. So that's going away, which is huge in solar financing, because right now, financing with interest rates at 8+% or greater, it's the most expensive payment that you can get. Losing out on that tax credit is going to mean it even takes that much longer to see some sort of benefit from it. If you're going to finance something for 20, 25 years and you don't get the benefit of that tax credit, that was the juice, that was the squeeze of the orange that created the juice of the benefit of adopting solar if you wanted to own a system, and that is now gone. So point number one I want to discuss is solar financing is not the way to adopt solar in 2025 and beyond. Even if interest rates start to significantly decline, the loss of that tax credit changes everything. So I think power purchase programs are going to be the standard. I think that that's going to be 95% of a solar adoption moving forward, because it's way cheaper than financing, creates a lower payment right off the get-go, and your cost to break even, the point of time in which you recover your investment, is almost immediate, because power purchase programs don't require you to come to the table with any cash yourself. So the month after the system's installed, you see a positive net return, because effectively you're saving money on utilities and you didn't have any dollars going in there to accomplish that. So I'll talk a little bit more about that. But point number one, solar financing is dead. And same with cash financing after the loss of that tax credit. Because right now in solar, we're about maybe 4 or 5 weeks away from terminating any contracts for cash-owned systems in 2025. Effectively, we're worried about the end of the year timing and whether or not we can get the systems installed, because you're dealing with your jurisdictions, a gluttony of permits, more people wanting to go solar because they don't want to miss out on the tax credit. So effectively, that deadline's moving up to September 15th for roof-mounted systems. So cash right now, if you can buy with cash and you can harvest that tax credit, we're really good at seeing a cost recovery of your investment, usually within about 6 to 8 years. If you miss out on that, you lose that tax credit. Now you're going to elevate or elongate that to probably closer to, I'd say, 11 to 12, 13 years, which is really going to make a lot of people go, is that really what I want to do? Is that as fast as I want to see that money come back. And that's just the point at which the money comes back to you. That doesn't mean that you've made any money on the money yet, because effectively you just got it back, right? So I think that will die along with financing systems. And I think, again, power purchase programs solve this problem because it's the cheapest way to adopt solar right now. No money required from you. And it's way cheaper rates than the utility. So it gives people some breathing room. It's like going back in time 10 or 15 years and be able to buy utility energy at a cost as it was back in 2010 or 2015, as an example. Another benefit of power purchase programs is really, I think, going to be the standard moving forward is the production guarantees. Because let's face it, solar doesn't have an excellent reputation, right? So many people, errantly so, blame solar for problems that really aren't solar's fault. I'll give you a common example. Underproduction and big negative balance true-ups. I talk to hundreds of homeowners throughout the year that say, you know what, my solar system isn't working. Look, I had to pay the utility. I had to pay them $2,000 this year in a true-up. That doesn't mean that solar didn't work. That just means the size of the system that you have isn't big enough for the use you were trying to make it produce for you. So in other words, think about it this way. I've got a size 11 foot. Okay, I can't take my size 11 foot and put it into a size 7 shoe. Nor can you take a solar system that was designed to generate 12,000 kilowatt hours of energy and make it all of a sudden generate 16 or 18,000 kilowatt hours of energy because you bought an electric car or you're the new family that moved into the older house that had solar. So again, it doesn't mean solar doesn't work. It just means that the size of the system is too small for you. That's one example. So effectively, because of the reputation of solar, I do think production guarantees. So power purchase programs have production guarantees. They have a minimum amount that the system has to generate in order for you to be satisfied with the purchase of the electricity. So for example, let's just assume you've got a really unscrupulous power purchase company that installs really inferior equipment. So you think you're going to get this much energy, the system's generating this much energy, and you're left holding the bag because you're buying that energy at full value. Well, a production guarantee addresses this risk. It's the single biggest component of these types of agreements that give me the confidence that the system's going to perform and that you're not going to be left in the lurch. Because basically what a production guarantee says is if the system doesn't generate 90% of what it's supposed to produce each year, you as a client, you as a homeowner, you're entitled to a refund of whatever the shortfall was. So bad equipment in the installation, it works against them with the production guarantee. The system falters or is having an issue, they don't send crews out quickly or in a timely manner, that works against them on that production guarantee. It's going to accelerate the time in which, now they're going to have to owe you money back because the system didn't perform well. So production guarantees with PPAs are really the gold standard right now of protection against all things that most homeowners worry about regarding solar. The system being down, a company going out of business and not performing the work, effectively some other concern that would create a scenario under which they're not timely responding to a error code on the system and it's not performing the right way. Production guarantees are a ticking clock against the utility provider that owns the system, allowing them to basically allowing you to have recourse against them if they don't perform. So I think that's going to be a big deal moving forward. I see production guarantees being the standard. I see more and more of those getting better and better in late 2025 through 2026 and beyond. Another thing that I think is going to be an example of why 95% of the solar market adoption will become through PPAs is this. Right now, the weak point of an owned system, if you want to own a solar system, the Achilles heel of that is batteries. Because when you buy a system effectively as an owned system, you're going to end up having to buy the system twice. You're going to buy the panels and the batteries initially. That's the installation. That's the first purchase. That's what most people think all they have to do is that. But see, a battery warranty with most manufacturers right now in solar batteries is 10 years with Tesla, for example, 15 years with Enphase. And so they were just never really meant to last 25 years. Just like your cell phone's probably not meant to last 25 years. It may, but it's not meant to. That's not the point. And so with discharging, charging, discharging, charging, cycling up, cycling down, etc., batteries were really just never meant to last 25 years. And so that creates a weak point in the own strategy, and that is that you're going to have to buy batteries again, probably somewhere in between year 12 and 20. which accelerates, obviously, the cost burden that solar has. Now, with PPAs, complete game changer that way, because all solar componentry, the premise of a PPA is another entity, another utility provider, another energy company other than yours, PG&E, Edison, San Diego Gas and Electric in California. Another utility company is going to compete with those big guys, going to compete with PG&E for your energy business. They're going to provide you energy at your home through the use of solar, but they own the equipment. They're responsible for managing it, insuring it, maintaining it, fixing it, repairing it, replacing it. They're just like the utility does. You don't ever have to worry about that with the utility. You're not directly charged. You're indirectly charged through their rates. So power purchase programs have a huge advantage when it comes to those batteries, in that they'll warranty the system, panels, inverters, and batteries for the full 25 years of the agreement. And that's significant. Now, point taken here, because I hear what you're thinking, right? 25 years is a long time. A lot of people have concern over a 25-year period of time. I don't want to be locked into I don't want to be locked in for 25 years. Well, you already are. There's no way to escape having electricity. And if you stay in that house for 25 years, you're already locked into an agreement with the utility for 25 years. And the only way to get out of that agreement is to sell your house or pass away. Likewise, the same with the PPA. You're locked in, but you're just getting cheaper rates. It's a lot cheaper electricity with a much slower growth rate. The only way to get out of it is to have someone else assign it or sell your house, one of the two, right? So effectively, it's the same type of benefit there, but here's the big advantage. Every part of the componentry is covered for that full 25 years. And lastly, it takes them about 15 years just to recover their capital in your property. Stated differently, the reason these agreements are 25 years is effectively it takes them 12 to 15 years to get the money back that they put into your property. And then somewhere between probably year 15 and 20, they're going to have to buy you new batteries. And so the agreement needs to be 25 years in order for it to make sense financially, in order for them to have any profitability or any chance at profitability with these agreements, right? Now, another point that I want to make about why PPAs I think are going to be the gold standard in late 2025 and 2026 and beyond is it's the fastest point to cost recovery. So fastest positive return, ROI. So if you don't have to have any of your money into the system, if it doesn't require you to come up with any cash at all, then the month after the system's installed, you're a net positive return. Your ROI is already positive because effectively what you saved, if it cut your utility bill in half or more, what you saved was achieved with no money on your side. So it's an instant positive cost recovery, positive ROI. And you can't say that with finance systems. You can't say that with owned systems. You can't say that with leases. And so effectively, I think that that's one of the major advantages of power purchase programs is they will get you to a positive return on your action to make that decision quicker than any other solar adoption program presently available. Lastly, I want to talk about this, and this is a big point. Most people are concerned about what happens when they sell their house. Hey, Greybeard, I'm thinking about getting the heck out of Dodge. I want to get out of California. I don't want to have a complicated transaction when I sell. And I get that. I understand that. So here's the point. If you talk to a realtor, talk to friends, or talk to anybody that has shared some news with you that it was difficult to transfer their solar system when they sold the house, I would argue that 95% of those conversations, transactions, were surrounding two types of solar adoption: financing the solar system, having a loan on a finance system, or leasing the solar system. Effectively, what that means is both of those methods of solar adoption, financing and leasing, require a homeowner to take on debt to purchase the solar equipment or to have the solar equipment. A lease is an obligatory payment in your name that shows up on your credit report. Anybody leased a car, shows up on your credit report. Finance systems are also indebtedness. Debt to income ratio applies, shows up on your credit report. So the difficulty is when you go to sell a house, you've got to get now somebody to fall in love with your fall in love with your home, and then fall in love with your solar debt too. Right? That's a difficult prospect. Most people aren't going to fall in love with your home and then go, yeah, I want to take on even more debt from your family in the form of taking over your solar loan that you bought 5, 6, 8 years ago. It just, for some reason, it doesn't feel right for folks. Now, a power purchase program is completely different in that you're not buying anything. You're not taking on any debt. Nothing shows up on your credit report. There's no indebtedness or obligation that you have to pay back something. And that's a big, huge difference. The other thing to understand is that power purchase programs are simply approved. The way you adopt them is a soft credit pool. Basically, they just want to check your FICO. As long as you got a 650 FICO or greater, they're going to approve you. And so it's a very similar transfer process with a new homeowner as signing on for new service with the normal utility, PG&E, Edison, San Diego Gas and Electric. It would feel very similar to that. It's not an obligation. I think the biggest thing relative to the buyer's side is they're not taking on debt for you. They're just effectively, would they rather choose to get energy for way cheaper than the utility, or would they want to stay with the utility? Who's going to choose? Energy is a commodity. If you can get it for cheaper, why wouldn't you? If you can go buy gas at $3 a gallon, are you still going to want to pay $6 a gallon at a normal station, or would you go to the $3 a gallon station? So, and then think about it this way, and this is a huge concept, and I tried, with my background being a 22-year former fiduciary financial advisor, the math matters, and I try to share this with folks all the time to help it make sense for them. But when it comes to a power purchase agreement and the way that these programs actually work and how they transfer, effectively the power purchase program, once it's in place, you get a quoted rate that then escalates slowly. So let's say your rate per kilowatt hour, let's take an example. Let's say right now with the utility, normal tier 1 energy, you're paying, 43 cents a kilowatt hour. Tier 2 energy, you're paying 62 cents a kilowatt hour. And let's say a power purchase program can deliver, you energy, all of it, no tiers, nothing, for 25 cents a kilowatt hour. So effectively under half what you're paying right now. All power purchase programs have some sort of an annual escalator. For example, usually 3.5% as an example. And the reason that escalator is there is they have to insure the system. Insuring the system over a 25-year period of time, insurance will get more expensive with time. They have to monitor the system. People capital and technology capital will get more expensive with time. And then they're going to have to replace those batteries. That 3.5% is really to create a sinking fund to replace the batteries later on. But anyway, the point is that the PPA grows much slower than the amount of energy growth in the utility sector, especially in California. So once you adopt the power purchase program, okay, at a stated interest rate, it's then locked in and grows slow. So if the utility is growing faster than the solar power purchase program is, think about it this way. Every year it's in place, it saves more and more money for the homeowner. So back to my first example. Right now, many of our clients are seeing it cut their utility bill in half, right? If it grows slower than the utility is going to grow moving forward into the future, 5 years into the future, it might be 1/3 the cost of the utility. 10 years into the future, it might be 1/5 the cost of the utility. So what's going to make somebody that wants to buy your house at some point in the future, that doesn't have to get a loan to adopt this, that doesn't have to take over your lease, that now can benefit from you locking in a rate that's way cheaper than they could ever get themselves at that juncture, okay? And then it represents 1/3, 1/4, or 1/5 the cost of the utility. What's going to make them so object that it would jam up your transaction, so object to that scenario, buying energy for cheaper that isn't debt? They don't have to assume nothing. All they got to do is have a soft credit inquiry, same process that they would go through to sign on for new service with the utility. What would make them so object to that it gums up your real estate transaction? I don't think they will. Maybe it's possible. I mean, it's possible, but I don't think that they will. And I think if you make your decision based on that remote possibility at some point in the future, you're doing yourself a real disservice in terms of savings now and throughout the rest of this 5, 10, 15-year time frame, whatever time frame you're analyzing. So I really hope that hit home. I hope this information has been helpful. The solar coaster is in full ride effect right now. We are in the industry riding the solar coaster. It always changes. It's always going up. It's always going down. It's an e-ticket ride. Sometimes it makes you want to vomit. I will be honest, and this is one of those seasons where it seems like everything's changing, but we're trying to give you the best information. Solar is still way cheaper than utility. Power purchase programs are going to be 95% of solar adoption moving forward. Cash systems are dead. Finance systems are going to be dead. And the production guarantees and all the other benefits of power purchase programs, I think they're only going to get better with time. If you'd like to explore any of this with us at my solar brokerage company called SolarWise, all you got to do is text YouTube, that one word, YouTube, to 84503. It's a 5-digit number, 84503. When you text YouTube to 84503, my team will be in touch and we'll see if we can help you. But I appreciate you watching the channel. Thanks for watching the Greybeard Talk Solar channel. This is a place where a little wisdom goes a long way toward turning sunshine into some serious savings for you. Please remember to smash the like, share, and subscribe buttons if you will. And rest assured, my friends, I'm going to be back here same time, same place next week to launch another video. Greybeard out.
Thanks for listening to SolarWise. Greybeard Talk Solar. Please visit our website, solarwiseco.com, to learn more. And we will see you next time on SolarWise.